a bounce in the Chicago Mercantile Exchange and the upcoming projections for the USDA report. Greg Gidel is ready to tell you about that and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we have had this shorter week, and it seems that the market bounced at the last moment. How do you assess this bounce?
Well, I think it's a combination of the uncertainties of the upcoming reports for next week, but also just the long weekend, and that we had really pushed things down pretty dramatically here earlier in the week here, and that partly because of the acreage report of last week, and that. But I think the key thing is that there wasn't any selling down there, and with the long weekend, I think the traders decided they'd step to the side, and that kind of created a couple-day bounce there on Wednesday and Thursday. Wednesday particularly was quite impressive there, kind of fed on itself, but not a surprising kind of reaction from the traders out there when there's a time when things could get uncertain. Nothing overall, it didn't seem like we had anything dramatically different come out of Washington, though, as after that kind of bounce. But we're going to be watching some very, very important uh, reports here on the July 11th. And so that's where the market focus will be the coming week.
Yes, before we jump into the weeds of your projections, I think the market will well surprise some of these trade negotiations and trade deals. This week we have had an announcement about a deal with Vietnam, but this deal still would increase the tariff rate to about 20%, but would give, on the other hand, some access for U.S. products in Vietnam. Well, do you think other countries will follow suit in a similar way?
Well, I think there will be some additional announcements as we get towards uh, the announcement mid to late week here. And there also could end up being an extension on certain places just because there's so many of them that's out there. Particularly some real important ones we need to get figured out is what's going on with Korea, what's going on with Japan. Both of those have, and the biggest problem in this thing, I don't think it's agriculture is our sticking point. I think it's the manufacturing slash autos at this point. Those are two major uh, exporters of cars to the U.S. and that, and he keeps, well, Toyota and a lot of the Japanese firms have got operations here to some extent. Some of the Korean ones do, some don't. That type of thing. So you've got uh, that to me is really then more the sticking point than it has to do with the agricultural side of stuff. And who knows? I don't know. That those are two important both agricultural importers to us and also major manufacturing scenarios on that. Hopefully, we get some resolution on some of these. We have quite a few important ones out there. EU, Canada, of course, Mexico. Interestingly enough, by the way, this week we did have some purchases from Mexico and some unknown purchases on grains. They were just looking at the absolute prices down there near low or below, saying, "Hey, well, at this point, it's probably not going to get a lot lower." So there's been some purchases in the export world, some for this year, some for next year, type situation. So it's interesting that to some extent, some of our longer term local purchasers here, particularly Mexico, has decided that the absolute prices on grain, even if it's some kind of cost factor for them for some type of tariff. It's better to end up buying it now versus the uncertainty of what could happen in the U.S. Summer weather here at this point. So definitely, it's an important feature. Boy, it's hard to guess as to who's going to get a deal together, who isn't. I kind of feel like there will be some. There'll be some important ones along the way. Unfortunately, I think there's going to be a lot of uh, smaller ones that could get lost in the scenario. That's going to be important to us too, and that take the brunt of this whole expanded tariffs on our agriculture going out the door.
Yes, so jumping into the report, you are expecting a reduction in the total planted acres for corn and soybeans. Why do you see that change at this point?
Well, I think that the interesting thing is that uh, the planning levels were pretty extreme out there, and I think to some extent, we had this huge expansion of over nearly 4.7 million acres of corn, and so to some extent, the weather a little bit during May was a little shaky, so we had some losses there, but not big. We're talking 120,000 acres, and interestingly enough, sometimes corn goes up or goes down, then the beans do the opposite. But I think to some extent, the alternative of going on some of this ground into the government's uh, idle acres and that I think was a factor too, because both of them, like you say, uh, had 120,000 acres less. Interestingly enough, some of that minorly went into spring wheat. It wasn't huge there, but the overall total went up a little bit. And the other feature was cotton going up in the Southwest from their estimates in May, or excuse me, in March, versus last year. They were still down, from last year's total by over 1 million acres on that. So that's not, uh, that's really a West Texas situation, not so much Southeast. That's really where the big swing acres on cotton plantings are. And they did have a pretty dry season, and to some extent, there was some respite on that, but then it turned off a kind of negative late. So I think that's an interesting twist on what that might or might happen out that direction. As much to do with what happens with spring wheat, or excuse me, winter wheat next fall, if there's going to be more out there or not. But overall, the total was down about 300,000 acres versus what it was back in the spring, which was also off about 600,000. So nearly a million acres less than a year ago's totals on the major eight crops out there. And I think to some extent, I think it's the reality the time we got to spring here, and particularly May, and that some of these prices were just hovering above loan levels. So a lot of people says, there's not much incentive to plant something if particularly if I can't make any money at loan values. So that's was the big feature on the acreage numbers, which impacted our supply demand numbers as going forward.
So you also would think that there will be a smaller ending stock for both crops at this moment, right?
Well, yes. Interestingly enough, looking at the corn supply demand numbers that I anticipate the USDA will come out with on September 11th, is that the uh, planting numbers, as we mentioned, were down a little bit. And interestingly enough, the USDA also expanded or reduced, I should say, its harvested acres here by we're down like as I said, 120, but on harvested acres they took off about 600,000, and I think that has to do with some of the conditions in the the Southwest, Kansas, Texas. Texas particularly, they reduced down their harvested acres down that direction. Out west, it was potentially a dryness. In the eastern part of the state, they had a lot of rain, and that. So anyway, that being said, the one twist on the corn, by the way, that came through on the quarterly stocks that were also issued out here uh, last week was that the corn stocks were about 50 to 70 million higher than I was expecting. And the trade was maybe a little bit more directed that way. It suggests actually that our feed usage for this year could be reduced by 50 million. And so that 50 million rebounded our carryover stock back up to 1.4 billion versus the 1.37 type number. And so that being said, even if we had with the reduced harvest acres and that, we still had a production number that was about 70 million or so. Um, or excuse me, 120 million less in production, which overall, the surprise feature on this thing is that my carryover stock on corn for the coming year is going to be lower, but because of that feed usage number not looking as strong as it looked like it could be, and that 50 million carried over to the new crop carryover stock and then turned around. I think you really have to look at feed usage for the coming year by 50. So, but the interesting thing, the 1.735 billion bushel estimate is 15 million below the USDA's last month carryover stocks, going in the right direction. And that I don't know if we'll see how the USDA, they might just keep their powder dry and not change anything on the soybeans accordingly. Excuse me, on the corn carryover or feed usage and its impact on the carryover stock. So, sometimes they decide they want to wait a little bit longer, but the stocks number was a pretty important number that came out here on that. From there, soybeans, there was, they said, a little higher number on that, but I don't think the USDA is going to make a big adjustments on an old crop carryover number. Relatively speaking, I think they'll keep it at 350 million. From there, on old crop soybeans at this point because of that slightly higher quarterly stocks number. The interesting thing, of course, is what does we do uh, with the reduced acreages and that. The interesting thing is that there really isn't any survey out there so that to look at yields and that. So I suspect just like corn, they're going to leave their yield number at 52.5. I think that's still way too aggressive. But at this point, if it keeps raining in western Iowa and Nebraska and the western Corn Belt, that's the area that really has the chance to have a better overall national yield. We'll see what that turns out to be. Overall, the slight reduction in plantings and harvested area, and that does take down our production about 7 million. So that turns out to be maybe a 7 million adjustment in the USDA's new crop soybean carryover instead of 295 number last month. I suspect we might have a 288 million number for carryover stock. So the S&Ds for soybeans probably won't be a big factor in its price. The one thing, it, of course, always is a big factor is there going to be any adjustments in South America's output at this point. Definitely, there's been lots of murmurs down there that about the size of the crops. The 168 to 170 zone for million metric ton output for soybeans in Brazil. Seems to be right in the same zone there. Argentina's been up and down as to what might happen or not happen there. Uh, they've had some very erratic weather at this point, and that, so we'll just have to see if they make the adjustments there or not. But I don't suspect that the South America crops on soybeans at least will be a biggie. Now, from there. The corn numbers in South America definitely are somewhat up in the air a little bit, particularly on second crop corn. There's been a real talk about their second crop corn down there, yields coming through. I think that's definitely a positive in the northern areas, Mato Grosso and Gaia, excuse me, Guias. While Paraná and Rio Grande doesn't have a lot of second crop corn, but in general, their yields and crop season wasn't as good. So that'll be an interesting one. If there is adjustments in the corn in South America, it'll come from that part of the world. Maybe even some similar situations in Argentina from there. So uh, right now, at least, got a combination of of international and U.S. data. I think U.S. data will definitely be taking the forefront on corn and soybeans.
Are you expecting a rally with those numbers by late next week?
Now, that's an interesting question. That depends a lot on what the trade's average estimates turn out to be of how much dynamics. Because in my case here, these are not huge adjustments by any means in uh, new crop carryover stocks. But at the same time, I suspect that there will be some attitudes about some people jump the gun here and expect their yield, USDA to make big adjustments in the July number. That has not been the tradition. I think that's the one key thing is interesting. I think it's going to be that could create ourselves a little bit further rally. Unfortunately, the weather situation, which has actually the final, 15 days or more in the Midwest was above normal temps. We went from below normal in the first 10 days to above normal. But in Chicago, it was like 3 degrees average per day. That's a huge jump. And that this after the holiday here, this coming week, this moderates somewhat. There's different opinions of what happens in the next weekend's temperatures in the Midwest. We've had a tendency of being better than what the forecast has been this whole summer. So that could be a big feature on us here. Time we get to next Friday, if we've got another hot spell being projected, that could have a factor in there too. But from there, but I think that the combination of weather forecast and maybe my numbers being a little on the low side out there versus some other people could be a slight positive at this point. But I kind of feel like the coming week things could be a little shaky here. Wheat's another big factor we always end up having in here in the July number because we did have the big some adjustments in some planted areas in that. They had some big reductions, like at 400,000 acre less harvested acres in Texas, 200,000 less in Kansas. And to some extent, I think that's because of the dryness that was around all the way up until mid to late April, and that which prompted people to go ahead and bail up what they had or decide to take a disaster type of alternative instead of going towards plantings. Actually, Texas was like 440,000 down, Kansas down 200,000. We had some other smaller numbers here, Colorado, Montana, Nebraska, and South Dakota. It turns up of the 880,000 ton, not tons, acres that were reduced and harvested, 780 of it, or nearly, was in these big states in hard red. So hard red definitely its production prospects are about 35, 37,000, 35 to 37 million less than was it. I'm anticipating that to be reduced. A small reduction in soft red, and really no change in the Pacific Northwest winter wheat out there. So the overall number on that, as I said, could be 35, 37 billion. But the twist of it is that the USDA has a tendency to try to limit their potential in the spring wheat area because it's still a long ways away and all that kind of stuff. And so they kind of carry out a number right around 500 million in additions to the thing. And at this point, the rains have been very good in the northern plains and Nebraska, excuse me, in North Dakota and Montana. And my contact in the Pacific Northwest says that things are a little less moisture than they could have used in this last month or so, but it feels like things are going to still be very good. And so the reduced supplies of acres, a number of acres here in hard red will probably be made up by spring wheat and durum. And so the overall wheat output, actually, I'm projecting about 7 to 9 million higher, and that along with the 10 million higher beginning stock. So, uh, but kind of feel like there could be an increase in the exports by 10. So I'm looking for a slight increase in wheat's carryover stock from 898 up to 907. But international scenarios on wheat could be important as to what happens with the Black Sea. Uh, uh, right now, there's indications of be taking the Australian crop down, things like that. So we're right down here at loan value on this thing. So I don't sense that wheat's going to have any kind of major break in prices. It's already at loan, and so the key thing is what do we hear going forward from here? What happens in the Mid East? What happens in the Black Sea? Those kind of things will probably be the features on wheat going forward. But right now, at least, the market's attention will be on the U.S. Revised 2025-26 crop sizes here in the U.S., and we'll see what they turn out to be.
Yes, okay. We'll connect next week on Friday. Thank you.
Exactly. We'll get back on schedule.